Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor. And in this video, we are live reacting to GameStop's Q3 earnings and power hour. 40 minutes left in the trading day. And so we'll be watching the stock a little bit, talking expectations. If you're watching this on YouTube after the live recording, feel free to skip forward to, I'll put a comment, I guess, but you can find it yourself as well. Whatever the mark is where we're actually reacting to earnings. And for those that are here now, what's up? What's up, British? What's up, Lorenzo, Red King, CDJ, Jeff Slam? We are pumped to see earnings and pumped to see some specific narratives within earnings. I'm excited to get into it. What is up, David from New Zealand? Let's go. Let's go. Before I start talking the chat, what's up, Webster, and the stock, and of course, earnings, I want to get some of the kinks out of the way, share the screen, right? And of course, say, is that my window? If I go here, does it follow? Okay, great. To say thanks to those who made it into the Halo Sub Club. Thank you to all those who subscribed to the channel. I appreciate the support. All the earnings of the channel go to DRS Book GME shares. Thank you to those who have joined the channel as fans and or as friends. If you want access to my GameStop spreadsheet or discounted merch, etc., some other fun perks, it's just a way for me to say thank you for supporting the channel. And I consider supporting the channel to be a win-win-win, right? A win for me, of course, a win for you, hopefully, as it feels rewarding, and a win for the company, as all of the earnings of the channel are going to DRS Book GME shares. And we're trying to make it worthwhile. We're putting content. You can learn some stuff over here, as you guys know. But again, I just want to say thanks for all the engagement, all of that love. I appreciate it a bunch. And so we are we're going to be clicking refresh on this page some. Not yet, of course. It's only 2:20 p.m., but hey, can't wait to see those earnings numbers come out. Super exciting. What is up, Nathan? My predictions, so I've made some videos about it, but I'm expecting 50 cents in undiluted EPS, 37 cents diluted, and I cannot wait to see what the real numbers are. John, what's up, John? What's up, CrossFit George? Let's see it. That 1.3 billion revenue number. That's what I'm looking for on the revenue. Rabbit Squirrel says $40 per share today. That would be quite the spike. I think it's possible, but I think Q4 earnings might be needed to lift the trailing 12-month that much higher. But no matter what, it's an exciting time in the stock for sure. What's up, Ben from Guantanamo? John Today, Benjo. Man, so exciting. CDJ does not want GameStop to go up because he wants to keep accumulating. Yeah, it's the opposite of a prisoner's dilemma. That's what we're in as GameStop shareholders. It's like, man, if it goes up, I make money, but if it stays down, I'm going to make more money in the long run. Dang, what should I want? Right? What should I want? What's up, Dan? What is up, Marcus? Man, so fun. Earnings time. World Informer says, what's Wall Street expectations? And Dan said 18 cents. So I am almost 3 times higher than Wall Street on an undiluted basis. I wonder who's closer. MR Unlimited says, what's up? What's up, Tristan? What's up, Mahi? The Mahi. Love it. I don't know if you meant to post something with that. He says, I don't know if you read other people's posts, but what do you think of this? And then you didn't say anything else. So let me know. Oh, Braden BR, my actual brother, my bro says, what's up, bro? Bro, what you doing right now? Bro? I hope y'all got your popcorn ready. I'm having actual popcorn because it's earnings day. I can't wait to watch what happens. Let me move it back over to the ticker so we can appreciate the price movement as we're chatting. Not that the next 37 minutes matter that much compared to whatever happens post earnings. Also, one quick aside. I don't want to overhype. How does the stock immediately react? Like when you get so glued on what's the stock doing today, right now, and you let that define whether you think you are right or wrong about a bigger picture fundamental thesis, it's a trap. It's a trap to be doing that. So ultimately, what we really want to see are the numbers. We want to see the numbers, and let that combine with what we estimate, project, right? How we value it. Let that kind of inform your long-term thoughts rather than, oh, the stock's up, I'm a genius. Oh, the stock's down. Oh no, it's horrible. Jeff says we're straddling 23. A jump to 40 would be wild. It would be crazy. I would be here for it. What's up? I don't know how to say your name. Bataran? Last name Bish? Or maybe it's Nabish. Hello from Mongolia. Amazing. What time is it in Mongolia right now? Hello from Canada. Lorenzo says best to just not care. That might have been in reference to whatever Wall Street thinks, or it might have been in reference to whatever the stock does. Let's go free. He said, woo! I knew you'd be live. Stoked. Yep, active rehab. Yeah, 227. I have not updated since a couple days ago. 227 million in net income. That's my guess. I don't care if I'm it'd be cool if I was really close to accurate. But anyone modeling Q3, no one can hang their hat on, oh, I successfully modeled Q3. Because literally we've never seen digital power packs numbers reported. Like we don't know what the margins are. You know what I mean? Like you can model a lot of the other stuff pretty well. Like it might be a little bit more informative. Like, am I way off or in the right ballpark for hardware and software? But the collectibles revenue, and especially the margins, right? The profit, it's really like it's an educated shot in the dark, but it's a shot in the dark, So if I'm too high, if I'm too low, it doesn't really it's like, of course, I'm one or the other. We don't have anything to compare it against. It's a brand new business that happens to be explosive, So anyways, I'm much more interested in how's the company doing than how accurately am I predicting exactly each quarter what the company will do. I'd much rather be big picture right about the general future of the company. 100% EPS day to EPS beat. Yeah, that would be, I mean, of course they'll find a way to spin it bearish. I'm sure news articles will still be, saying about something bad about GameStop, whatever. Mitch Barker says, oh, I'm totally here. You are here, man. Waiting patiently. Let's effing go. LFG, so happy you're live for earnings. I'm here. Checking in from Lake Tahoe. What a dream, CDL. That clear water in Lake Tahoe. Man, I'm trying to catch up. I'm trying to catch up to the comments here. Y'all are popping off today. Adam Austin, hey. What's up, Mr. Beakers? Benjo says I'm the man. Thanks, dude. Northern Germany. Yeah, and awards tomorrow. I'm excited to talk about that in a minute. The GameStop awards. What is that? All right, we'll talk about it. Afro says, any thoughts on how they can justify their sub 20 EPS? I mean, the main difference is digital power packs. I'm modeling it, and a Wall Street analyst. I mean, technically, there are no Wall Street analysts for the stock, so I don't even know where are they pulling the estimates from? Because there's no person that says that they cover GameStop that works for an institutionalized bank or institution. So I don't even know where the number of that estimate is coming from because I don't know any person that's behind it. But even if it's just an algorithm estimate, it's because they're not putting in digital power packs at all. That's the biggest difference. Active Rehab says, everyone give Budget a like. Hey, there's 123 y'all in here and 31 likes. So doing batting 250 right now. Hey, if I can bat to 300, I can play in the pros. So a couple more likes and I'm there, boys and girls. It's a bro union instead of a reunion. Andy London from England, GME bromance. Dan says, what if I don't watch the ticker and do a reaction just based on the numbers? Yeah, so I will reference the ticker in this power hour a couple times. And of course, I will reference it after earnings. But I'm not going to just stare at the ticker. I'm going to be staring at the earnings, But we'll enjoy the movement. What in the world? Look at this super 20. Is this 20 Australian dollars? Forever. MK forever. Thanks for the work. Sydney here. As in Sydney, Australia, probably. Amazing. Thank you so much for that. And thank you guys. A couple of y'all liked that super. That's super awesome of you guys. Oh, and I'm batting 300 now. 44 likes, 122 y'all in here. Batting 300. We're in the pros. Trader SRW says, yo, Jeremy, let's have a big beat. Lorenzo says, it's a trap. What's a trap? Mahi says, not written by me, but sounded convincing. I still don't know what you're talking about, Mahi. Sorry if I keep missing it. It is genuinely, when the comments are going off, it's hard to see them all, but I'm trying. Active Rehab says they think 175 is the net income number. So we'll see. Me versus you, Active Rehab. Just kidding. All of us together. John today says the fact we can trade warrants in after hours is amazing. Yeah, pretty cool. Like this is the first, honestly, kind of a cool plot, John, today, because this is the first earnings that there is basically a derivative tradable in after hours. That's honest. I haven't even talked about that in any videos or even really thought about that, but that's pretty amazing to think about if you wanted to use warrants as your way to either accumulate exposure or to trade volatility. Like you have that opportunity in after hours through the warrants, which is pretty cool. What in the world? Misto, thank you so much for the super. Thank you all for that liked that. $20. Crazy guys. Thank you so much. Bisto said, I got options piled up, took profit on half, so I'm swinging for free. Thanks for all you do. Man, way to go, Misto. Got house money and some options. That's a great feeling. Nathan says, you're the best GME YouTube channel. We could be on another GME live stream, but we chose yours. Yeah, for real. Thank you guys. 150 of you guys. I appreciate it so much. I know that I'm not the most entertaining, right? I'm not, my setup is not the best. One day, hopefully I can at least get a mic. Hopefully one day improve the quality a little bit, but I'm not a professional entertainer, right? I'm just talking the stock and the fundamentals. And I appreciate you guys appreciating my approach. I know when I live stream, YouTube likes to bug out and cut out my audio in and out. So many hurdles we got to jump through in this life. But I appreciate you guys finding value in a balanced approach rather than only looking for the hype and the hope. And, is today the day that we hit the moon? It's fun to have that side of the coin as well. I'm thankful for the whole GameStop community, but yeah, I think it's cool that I get to kind of add a little bit more depth to the fundamental side of the community that has a lot of people really involved on the technical side. And so I feel like it's more balanced as a result of everyone. So anyways, I do appreciate it. We want to see confirmation that the company is going in the right direction. Yeah, I mean, if Digital Power Packs is a nothing burger, that'd be a bummer. But they said something burger when they first announced it. So yeah, can't wait. La Caprica finally caught you live. I don't know how you would pronounce your handle, but says, hope you're having a good time. Exciting. Yeah. Thankful to have you here. You're super active in the comments. I always appreciate your engagement. Thanks for being here. Mahi says, I just want to say I typically hate watching other people's streams for earnings dates, but you're just different. Thanks, Mahi. I can't. How do I face the camera? Man, what a weak heart. What a weak heart. Why does it look so weird? Oh, there it is. Much love, Mahi. Another soup. Oh, toward the mic. Thank you, Mad Sham. Yeah, if y'all want me to get a mic, drop a like on this soup from Mad Sham. He's saying, hey, bro, would really mean a lot if the audio quality was a little better. I appreciate that contribution. And I will, because you requested it, I will put your contribution towards a mic. And I will also put the effort forth to figure out how to make that mic work and to improve my skills as a communicator and streamer. I will honor that. Mad Sham Super is not going to DRS Book GME shares. By his request, his super is going to a mic. So I do appreciate that because I would like a mic. Like a mic. Y'all been stuck on Mike and Ike's, and we're talking about like a mics. Give Mad Sham a like if you want me to get a like a mic. CrossFit George also toward the mic. Man, this thank you guys so much. Seriously, I'm like super thankful. British adding more for the microphone. Okay, we're okay. So this is a unique live stream. British with the 50. Way to go. I mean, if you guys, so anyways, no one ever feel pressure to contribute to me. But if you are a fan of my content, you got to be a fan of these supers helping me improve the content, right? Because everyone's welcome, right? You can consume for free. There's no hidden paywalls, right? There's no like secret society going on here. And so anyways, for other people to take it upon themselves to say, hey, I want to invest in the channel and help this channel be better for everyone to benefit. That's what I'm trying to say thank you to and to support and feel encouraged by. I'm not trying to like glorify the monetization of the channel. So hopefully those intentions are clear enough. Black Wolf, you're from Wisconsin. Mr. Beakers from Ohio, Norway. What's up, Harvard Lifestyle? Ryan Young from Canada, Austria. So cool. Active Rehab's also in Canada, Ontario. The Great Babe said, thank God. I was starting to wonder if no one was streaming earnings. Am I the only one out here? Surely everyone's going to stream earnings. Punky says, happy earnings day. My body is ready. My body is ready. Mitch Barker says, are we finna see the legacy operation pull in 100 million? That is the question. Hello from Germany. Punky's from Las Vegas. Of course your body's ready. You're from Vegas, bro. Another soup. USB Yeti mic with Rode mic stand. Thanks, Mahi. A couple more soups to the mic. Man, super kind of you guys. Ryan Young, Jay Card. Thank y'all so much. Thank y'all. Who else? Nathan's in Australia. Chances Ryan averaged down on Bitcoin. I think only dads that he probably has done that in Q4. I would say it's like a 5%, maybe 10% chance he did that during Q3. And if he did it during Q3, it wouldn't be very meaningful. It would make Bitcoin like a $5 million loss instead of a $10 million loss, basically. Like it didn't have many days much lower than GameStop's original cost basis. Unless they like dumped into it, then it could have gotten Bitcoin all the way to a break-even quarter. But anyways, I'd be much more excited if they bought some during Q4 because they were down here at 85 just a couple weeks ago, right? But this is Q3, right? It's like, what is it? August, September, October. Like it kind of traded sideways most of the quarter. So they could have bought some more at 108, but They started the quarter at 113 or 110, I think ended up being the number. And so, there's just not that much to work with. And the end of the quarter, it ended around ended around 110 on November 1st. So anyways, I think it's very likely he bought some more recently, but it's not going to show up until the 10K. Lorenzo, Mike from Games. Okay, so a Mike from GameStop that Mahi Mahi requests is a USB Yeti. We're gonna put all the pieces together. Thank you guys for the supers. We are taking that next step as a channel, just in time for GameStop taking the next step as a company. I appreciate it. I appreciate it. Only Dad's bought a cigar and a tall boy for earnings. I don't know what a tall boy is, so if that's something incredibly sensual and inappropriate, I'm sorry, YouTube, for educating the minors out there. Maybe it's just a fun beverage. This is how uncultured I am in some ways. Let's see. Likelihood of hitting 26, I think pretty decent. I would say like higher than 50% chance that we cross 26, but we'll see. Yeah, and Michael Burry's gonna say something, right? This month. So Brandon Howard says, any worries about dilution? I'm not worried about dilution. I think they might issue another warrant. If they do, it will be for an even higher strike conversion and probably even further out. And ultimately, if GameStop's trading at 23 right now, and they end up issuing a warrant that says, hey, we're going to allow shareholders to buy shares at 40 per share a year from now, then it's like, well, shoot, that's pretty bullish, It's pretty bullish. But that historically they wait a day. So that announcement would hypothetically come out like tomorrow after hours, and they usually let the earnings settle for a day. And so you would still if you were really afraid of, what if they issue a huge convertible and the stock crashes huge? I don't think they will do that. But if they did, then if you think that they will, then you would still have the opportunity to sell shares in market hours tomorrow. But I would say it's unlikely that they do that. And obviously you risk missing out on substantial upside for every share that you sell, but you can always buy back in. It's not like you risk missing out forever. You just might wish that you didn't try to get too cute with it. But I'm not a day trader. Obviously, I'm the fundamentals guy. We're looking at the fundamentals. 18 minutes left in market hours. Golly, super exciting. Golly, it feels like Christmas morning. It does. Ben has calls up 130%. Mitch Barker doesn't even know what's going on. All types of calls and shares. Red King says, just never do thumbnails. Yeah, maybe, improve the mic quality. Maybe one day improve the camera quality. I don't know. I kind of like just recording on my laptop because it's simple and I can do it from anywhere. I'm definitely not trying to become a professional YouTuber. I literally say in every video that I'm not that. I'm comfortable doing a better job at being not a professional, like maybe one day if I can become like semi-pro quality, then at least as it relates to production, that would be fine. But I'm not trying to get into, I am a YouTuber, I'm not trying to be the most entertaining. I'm not trying to keep dopamine hits and sound effects and crazy reactions and like over dramatized language. That's not really my thing. And I'm not trying to talk about a company I don't actually believe in, right? I'm not, GameStop has not paid me money to talk about their stock. And I wouldn't if GameStop wanted to pay me, I'd say, sure, go ahead and pay me. But like, I'm saying if some other company was like, hey, we like your channel, would you want to cover our company, we'll pay you blank. It's like, well, not if I don't believe in the company, you know? And at this point in the market, and at this point in GameStop's fundamental turnaround, it's like, what could you like more than GameStop? You know what I mean? So, anyways, Misto says I actually am the most entertaining. Real analysis instead of memes and bananas. Thanks, Misto. I appreciate it. Tristan says, what are your thoughts? At what price would stuff hit the fan? Yeah, I mean, that's, I got to think a little harder on that. But I think the melt up risk becomes incredibly high as you approach 29 and 30. Once you hit 29, all of a sudden, and 30, the convertibles are in the money. And so that's upward pressure. And then warrants are in the money. And so that's upward pressure. And then S&P 500 inclusion is prepared. So that's upward pressure. Like I think, and then if you add in all those upward pressures, that gets you to 35, 40 a share as your new floor. And if that's your floor, is that high enough to cause the boom, right? The technical squeeze, force shorts to close. I think not necessarily overnight immediately, but I think the clock starts ticking faster, right? I think it is possible, definitely. And I think it's possible that happens in Q3. I think it's inevitable that it happens eventually. But is it just like a price that hits in a moment? I don't think so. I think it needs to be more of a floor that's rising, right? That has that won't break, right? It's not like it hit 65 for a day and so now it's going to go to 6,000. I think it's not going lower than 45 again, right? Or whatever that number is. But I think that might be high enough, you know. Very possible. Yeah, some crazy candles going on right now. We got XAP from Sweden. Super exciting. Dr. Geppetto is here. Where are we in Larry's turnaround phase? Yeah, I can reference that tweet one day soon. I might make a dedicated video for it. I haven't covered much of Larry's talk. I need to talk about it. I need to talk the talk. Trouble says, dang, you're going to have a fancy microphone. Yeah, I guess. I don't know how much they cost, but I guess I probably have enough for it. I don't know. If I don't, I can cover the rest or at least build the pool and see how much further I have to go, whatever. Yeah, chat's popping off. Chat's popping off. Oh, someone is sick because they stopped eating fried food. Prayers for the body. Red King says Jeremy's mic will be from the future. We got some other tickers getting shout outs in the chat. Man, I'm almost caught up, which is great because there's 13 minutes left. I will definitely try to get the mic from GameStop. I mean, I will get the mic from GameStop 100%. That's my priority. And I will try to make it that Yeti one that Mahi Mahi said I should get. So, but if GameStop doesn't sell that one, I will buy one the GameStop does sell. XAP says Newman U87 AI studio set. Is that like a streaming? Man, I'm gonna need to hire one of y'all to help me out one day. Oh, just in case says Tall Boy is just a big beer, 24 ounces. Great. Thank you guys for that. Thank you, Ryan. Thank you, Justin. Thank you, Benji. Yeah, all y'all know this. So fun fact about me, I literally don't drink, which is one of the lamest things about me. But it's not a particularly high horse. It's not like this holier than thou. I'm not like opposed to drinking. I grew up having sips of my parents' beverages as like a 2-year-old. Like every night, like, can I have a sip? And they said yes. But I don't know. I just didn't get into it. Like, and I just kind of felt like if I'm not into it and I'm already 30 something, then I might as well just like kind of keep it rolling. You know, like I've had several family members on both sides alcohol ended up taking their life. And so I'm not like scared to drink, but I'm kind of like, if I haven't started and I've made it this far, right? I made it through high school peer pressure. I made it through college with a social life. I never got totally ostracized, just social enough to still be one of the boys. I figured we'll just keep it rolling. So, anyways, so there's a lot of alcohol culture that I'm like, man, I wish I knew more than I knew. Um, Afro says my thing or unique branding could be the guy who doesn't do fancy stuff. Yeah, totally. The value is the coverage. If you're here for the actual fundamentals, you're in the right place. You know what I mean? Justin says we need more cowbell. We need more cowbell. Yeah, if I had a cowbell, I would ding it right now. Do a little dance real quick, right? Turn this into a TikTok live stream. Jeez. Mike says the only thing with your screen sharing is I feel like it's too zoomed in, and when you navigate, it's a little hard to follow. Yeah, I go back and forth with that. Like sometimes, like I want to make it big so that if people are watching on their phone, they can see the numbers without having to like squint. So that's why I zoom into the page. But when I'm working on the sheet by myself, I'm looking at it like this, and I like the more of the sheet that I can see and still read, that's how much I want to see, you know. But let me know in the comments of this video or chat if anyone else has other thoughts on I'm too zoomed in, I'm too zoomed out. Obviously, I can't do the perfect thing for everyone. But that's the hard thing about this company is there's so many fun numbers to look at. You know what I mean? Like you really want to catch up with it. Mister says 2880 being broken is where we get crazy. So that's probably on a charts basis, like the technicals basis. And I think I basically agree with that. Like that's on a fundamental basis, I'd say that checks out. Like once you break 2880, all of a sudden you are at those convertibles, warrants, and S&P tranches. And so I would think that if you can sustain 29, then you'll get to 40 fast. And if you get to 40 fast, the amount of momentum and the lack of headwinds, right? Just the runway becomes really exciting from there. So I think it won't be until Q4 that we sustain that, but I wouldn't be surprised if it's Q3. Like I'd say like 30%, 35% chance this is the earnings that does it, and 65 to 70% chance that we need one more quarter from a fundamental basis. The reason I say that is because, again, the trailing 12 month, if I'm right about Q3, trailing 12 month is about to go up from 102 to 284. But after Q4, trailing 12 months is going to go up from 284 to 398. Now, if it goes up to 284 after Q3, it becomes inevitable that it's going to go up more after Q4, right? But so there's still a decent amount of people that only invest on the current reported PE, which is based on a trailing 12 month. And so it might not be until after Q4 that people really price in the Q4 numbers, So anyways, we will see. What else? Almost 300 of us in here. What is up, guys? What is up? Super pumped to watch the show. That is GameStop earnings. Red King says, fundamentals guy is exactly what we need. Alfred, what's up, Alfred? What's up, UK Dave? What's up? Yeah, so many of you guys. Down Wego. What am I missing? What's up, Clark Kent? What is up, man? Project Burpees, Clark Kent newest. Oh my gosh. I didn't even formally officially shout you out, Clark. Clark is the newest friend of the channel. Let's give it up for my boy CK. Thank you for joining as a friend. And congratulations, of course, for investing in yourself. Rets Bro says, just get a Yeti. Mahi says, yo, Jeremy, I run a YouTube channel with 1 million+ views in the exact range of not too professional, but a bit better than just the laptop. Hit me up if you ever want help with the basics. Mahi the Mahi. Shoot me an email, bro, for real. Like, honestly. I think my email's on my channel. Or it's at least on one of the, I link several websites. I think every single one of those websites has at least one email, and any of those emails would make it to me. So anyways. People say default zoom is fine. Alfred says 100% zoom. Right? Jeff says sober life is a good life. What's up, Jeff? Cheers. Cheers, man. If you're sober, I'm drinking a coffee. I'm not sober from caffeine. So I'm not trying to say I'm immune to substances. Zamora says default zoom is great. Afro says 100% zoom is perfect on desktop. Agree. Like if you're on desktop, it's perfect. But if you're watching on your phone, it's tough. Down says make it bigger, please. Yeah, so, I'll just always go back and forth. I'll try to mix both of them in. MR Unlimited said, yo, Jeremy, what did you ask Santa for Christmas or for Xmas? I asked for a couple things, a new pair of shoes, running shoes, and I asked for my own merch, which is pretty funny. But I made this store so I already have the wallet. And I ordered those in bulk, brought them in. So those are in my house, right? But then I've got these other things I designed through this website, but I haven't actually seen that. I don't have it myself. And I asked for everything. Partially because I love Budget for Life, right? I made the brand or co-founded it. And also because if I'm going to sell these, I want to know what the quality is like. So I'm kind of hoping that I can get my hands on it and get a feel for it. Other than that, GameStop graded cards. That's kind of I'm like, hey, get me some of my Budget for Life merch so that I can kind of test it out. Give me a new pair of running shoes. And then after that, just dump it into graded cards. Pick whatever cards you want. Send them my way. So that's my Christmas wish list. We're getting close. It's 2:56. Okay, so the stock is dumping. So are we there? I mean, we got to be close. Oh, thanks, Mike. He says the merch looks sick. They say we're about dumping it before the numbers come out is bold. That makes you feel kind of excited. Golly. Man, I'm so pumped, guys. We're so close. Oh, we're so close. The 10Q will come a little bit later, but should come today as well. Right? Jeez. Not that. Oh, man, I can't wait. Chubbo says he'd rather it be pumping. Yeah, I mean, I guess so. I guess you'd rather it be pumping. I mean, up's better than down, but if it's shooting down before the earnings even come out, it's obviously not based on an earnings reaction. You know what I mean? But yeah, if you're holding leaps or calls, then it's dang, there ton of IV just got wiped out, right? But JC says the initial move is always the opposite of the actual move. And that's why I was saying I was kind of excited, because usually when it's ripping before earnings, it gets dumped after earnings, and sometimes vice versa. Biggie Boy says, been here since 700 subs. Nice to see you covering earnings since 700 from Sweden. Thank you, Biggie boy. Excited that you're here. Thanks for being here. Thanks for the support. Thanks to the 328 of y'all that are here. Sorry also for any of you guys that I guess apparently some of y'all mentioned Marantz is sick and is not streaming. So my apologies if you were hoping to see Marantz today and you can't because he's not streaming. I know there's a pretty big drop off from Marantz to me as far as just experience in the YouTube space. I don't have a space helmet. I would love to get one day. It's super cool, right? But he's got a better setup than me for sure. So if any of y'all are here because I'm your second best option, hey, thanks for tuning in, and we'll still cover the earnings, right? We'll still cover it. Obviously, most of y'all are here because you want to be here, and so of course appreciate the love. Thanks to everyone for that support. Space Time, Alfred, Red King, XAP, Placer, Jonathan. Thank you guys. 259. You rock, homeboy. You rock. Golly. Look at that. Oh, it's just fun to watch the ticker sometimes. I do not know Houston Wade. That sounds familiar, actually. Do I know Houston Wade? Is that a real person or is that a YouTuber? I've seen that name. I'm definitely not good friends with him. I'm definitely not friends with him. Houston is a weenie. Houston is a hater. Oh, maybe I don't. Yeah, like I said. All he does is bash RC. Okay, he must be a YouTuber. He's a YouTuber who talks about. Okay, so I've seen his name, but yeah, I haven't watched his content. I'm not familiar. Certified Weenie Hut Jr. employee. Weenie Hut Juniors? Houston, they're saying you work at Weenie Hut Juniors, bro. Sorry. He might be awesome. I don't know anything. I really don't know. So, Houston, thankful for your life. Way to be a human. But no, I don't like know him. Oh, he sold all his GME. Is it true, Houston? Have you sold all of your GME? Is it out? We got people reporting numbers. Mike Forever, how are you seeing 25-cent EPS? How you seeing it? You just punking me? You punking me? I do try to be nice to people. Thank you all for that. Man, I was kind of watching the ticker thinking maybe the ticker would tell us when. Oh, boom. Look at that. Holy smokes. 6% drop. Wow. I still don't even have it on my end. Just website going to crash? He said it's out. It's out. Oh, there it is. Boom. Let's check it. Okay, so initial reaction, 5% drop, climbing back up to 3. Let's look at the earnings. It is here, and then we'll check back on the stock in a little bit. 430 of you guys, thanks for being here. I'm not going to see the chat for a minute through the earnings. If you drop a super, I will see it. If you don't, I will not. But still encourage y'all to check it out. So here we go. Net sales, 821. Okay, that is super interesting, right? I'm way up here on 1.3. So the Nintendo earnings about the Switch 2 Q3 sales being lower than Q2, very relevant. And curious, Ryan Cohen's comments about the collectibles business, if the net sales in total are 821, SG&A 221.4, so still seeing super healthy decline in SG&A, although some increase slightly quarter over quarter, which is normal heading into the holiday season. Not like a reversal of trend. Operating income of 41.3 million compared to an operating loss of 33.4. So you still have a $74 million swing in the positive direction. Check this out. Yeah, super fun. $77 million improvement in trailing 12-month income, right? $77 million improvement in trailing 12-month. Adjusted operating income was 52.1. So does that mean they actually did finish selling their overseas stuff? Or why is the... Oh, no. Oh, yeah, so maybe so. We'll see. We'll see. But if you net out one-time stuff, their operating income was actually 52 million. So there's some one-time stuff that brought this down by another 11. So the more accurate trailing 12-month operating income is actually like a, what is that, 84 or 88 million dollar improvement. Net income of 77 million. So a $60 million improvement in net income. Excluding impairment, adjusted net income was 139. So did they, what? Okay, so they definitely hit, these impairments have got to be related to their overseas, because they're still holding 19 of Bitcoin. So I was thinking, did they buy a ton of Bitcoin at the peak during Q3 and that's why they have extra losses? But the Bitcoin is valued at 519, which I wonder how that compares to what I had expected. Bitcoin way down here. Or is it way up there? Yeah, I literally had it modeled at 519. So they did not buy any more Bitcoin. Nailed that. Nailed that. Anyways, back to, so they didn't touch Bitcoin, but look at these one-time changes. Unrealized, excluding impairment and non-cash interest expense related to the issuance of warrants. How expensive were those warrants? It's got to be mostly the impairment of their France business. Adjusted net income was 139, right? So almost greater than a 5x improvement on net income year over year on, if you use their adjusted net income, which again, if you're modeling and valuing the company, you should, right? You shouldn't care about the one-time stuff. You should focus on the sustainable portion of the business, right? And so, okay, one time it costs you money to exit France, but long term, you're still at a 500% or something improvement year over year. So looking at it this way, net sales actually down a little. I'm just so shocked by that. I really am genuinely shocked. Like to me, again, I said this in my live stream yesterday, possible I was high on hardware due to the Switch 2 being a lot of pent up demand for Q2, and then holiday doesn't kick in until Q4. But and I also said that, hey, if I'm way high on collectibles in Q3, it just shows that much more bullishness for what collectibles is going to do in Q4. But still, I'm surprised to see a year-over-year decline in sales. Cost of sales still coming down, so more profitable now than GameStop was then. So a $49 million interest income. Interest income. Yeah, yeah, yeah. I guess, have they done something with some of that cash? Because I expected a $92.9 million interest income. They must be, obviously rates have come down, but not in half, you know? So I'm wondering if they're holding some of their cash in even shorter term holdings, which is lowering their income from that cash. $9.2 million loss on Bitcoin, which I had modeled 9.3. So that's fun. $84.1 million, $7 million in tax. I had thought $5 million just as an arbitrary placeholder. So 77.1 million in net income compared to 17.4 a year ago. I mean, even if you take out the one-time stuff, a 4x is pretty stinking awesome. Right? Even with the one-time stuff, net income still 4 times higher than it was a year ago. But the explosiveness of digital power packs seems to maybe be delayed, more impactful in Q4 than in Q3. Right, the beta. So basic income per share of 17 cents, diluted of 13 cents. And then here's their cash flow statement as of the 39 weeks. Let's check it out by segment. So Europe is still there. Australia flipping back to a loss is really interesting to me as a GameStop investor, because I have thought last quarter Australia posted a profit, and I was thinking kind of like, does that mean they're actually going to hold on to Australia? Which to me, I was feeling a little bit like, oh no. And I was hoping that, like, I would be more excited if they went ahead and sold that and focused on the mainland. But the Australia segment reporting a loss in Q3 makes me feel like it's more likely that they do end up divesting from Australia also, which to me increases, again, the efficiency, the sales per store, the profitability, all of that compared to where GameStop has been. So, and it gets all this off the balance sheet as well. But that also means there's yet another year, right? They wouldn't really do that until probably either announce it right in January at the tail end of Q4, or just put it into 2026 of, hey, we're looking to divest of Australia this year, you know. And then you have that as an impairment for 2026's numbers, but they probably would be able to sell this for more than France. Anyways, for the 3 months ended, right? France still, they got a ton of stores out there, a ton of stores, but they're not profitable. 8.6 in asset impairments from France during this quarter. Gross profit in the US. So let's say like one day the US is the fullness of, oh, this is 2024. Geez. Show me 2025. Golly. Okay. There's the asset impairments. 10.7. if one day, like the US is the future, right? Gross profit of 210 on 617 of sales means that the profit percentage was 34.1% was their gross profit percentage in Q3. That's kind of insane. I mean, the gross margin, I was thinking 27% gross margins, and their US business was at a 34. So even though in Q1 there were no Switch 2 sales, and when Switch 2 came out, right, their margins dropped all the way to 29% because those new units are sold at like an 8 or 9% gross margin. So even with Switch 2 in the mix during Q3, their US margins are all the way back up to 34%. So that is super exciting. Their total gross margins look much worse than that. 273.4 divided by 821. Honestly, not much worse. 33.3% is their gross profit margin. Like their gross margins, 33% during Q3. I mean, that's shocking. That's shocking. So there's the 9-month numbers. Here's the balance sheet. 7.8 in cash. Oh, so they bought some longer term T-bills. That is why their interest income came down a little bit. They went ahead and took $1 billion and locked it up into T-bills with an expiration of greater than 90 days or greater than 60 days or whatever, 90 or 6 months. And so if you buy some 1-year expiry T-bills, GameStop lists them as marketable securities. So with rates coming down, GameStop decided to lock in the approximately 4% type rate. But when you have a longer term, like the rates on the 1 month and 3 month are actually higher than the rates on the 1 year because the Fed also knows that rates are probably coming down. And so anyways, that is a huge impact as far as cash generated by the cash coming a little bit lower, but more sustained. Merchandise inventories way lower. So they are not front loading their inventories nearly as much, but inventory per store is actually probably pretty similar. I mean, they have what, 575 divided by 830. So they have 70% as much inventory as they did last year, but their store count at the end of Q3 last year was approximately 3,500, and they're approximately closer to 2,250 or even a little lower now, which is 64%. So they have 64% of the stores compared to a year ago. So their inventories are down, but only proportional to their stores. So that's really nothing. And then the assets held for sale, that's just France. So France has not sold. It's still sitting there, which is what I thought. I didn't think they would sell it yet. I thought they would wait until after Q4 or to sell it at the very end of Q4, right? Go ahead and get it off the books in January or February. And so I'm glad to see that because I expect that in Q4 specifically, France and Australia for that matter will be profitable. There a lot of people buy stuff for Christmas. It's just the reality of being a retailer, especially in the very first year of the Switch 2. So anyways, nothing dramatically different. Obviously, I mean, they do literally have $4 billion more in assets than they did a year ago. That's not new information. That was already known. But still, when you think about the year-over-year numbers, Pretty dramatic. Pretty dramatic. So they've got that 519 in Bitcoin operating. Okay, so we'll be able to solve for their 218. What was this last quarter? So the current portion of their operating leases is how I get a good idea of their current store count. I'm assuming it's not that changed quarter over quarter. Last quarter it was I wonder if that's actually super interesting. Current lease liability is 218. That's actually a big bump. So I wonder if a lot of their long-term leases are actually coming due right now. Like, I wonder if they are about to put the axe on so many of their unneeded stores. What is the long-term? Oh, here's the current portion. Oh, there we go. There we go. Oh, sorry. I was still looking at the assets. Those are the assets, which is the long-term lease liabilities. And so operating lease liabilities long-term plus operating lease liabilities short-term. Okay, so the current portion is 94.3. Last quarter, it was 101.5. So yeah, they have even fewer stores than this. They have even fewer stores than that right now. Super interesting. I mean, expected. I thought they might slow down the store closures a bit, but they're still on the gas, which is encouraging from a efficiency perspective, continuing to lower the cost of doing business and increase their profits. But it's not sexy in the meantime, right? Every GameStop investor is looking forward to, when can we just talk about explosive growth? And so to see another quarter come in where, oh man, it's actually like we're cutting costs, right? We're continuing to adjust our footprint to optimize and then begin to ramp and explode in growth, right? It's not fun to go through that transformation process, but it is long-term exciting that they are staying prudent in their management and leadership of the company. And again, that France liability held for sale. Statement of cash flows. Check that out, 42.2. So that warrant, I guess they said it's an interest expense. Warrants issued. What did they call that up here? A non-cash interest expense related to the issuance of warrants. It's non-cash. So it's like non-cash interest expense is basically like the future expense of when the warrants ultimately are converted. Like, is that, I need to learn more about that. I didn't know this would be a part of it, a part of their earnings. But it's crazy that their net income numbers, I mean, that's $44 million or whatever the number was. What was it? 42? Where are we? $42.2 million of a hit to net income, right? Net income $42 million lower than what it would be on a non-cash interest expense. So this 42.2, that's why they show you the adjusted net income in that little blurb at the top. The adjusted net income is substantially higher. Part of it is, I thought a minute ago, I was like, oh, it must be the asset impairments. Asset impairments are 10 million of that or 11 million of that, right? But the huge portion and also some stock-based compensation. Okay, so there's some employees getting some stock-based comp that's starting to tick up a little bit. But the meat of it is this non-cash interest expense related to the warrants. So Again, that's not like a recurring thing. It's a one-time expense. That it's not going to be every quarter. They're not paying $42 million every quarter because they issue these warrants. They paid $42 million one time, but they haven't actually paid it yet. It's like no cash has left GameStop's uh, vault. So anyways, what else? Some changes in receivables. We already talked about inventories. These are just proportional to their store count decreasing. Net cash flow provided by operating activities. I mean, what is the actual percentage of that? 111.3 minus 24.6, 86 million, 86.7 divided by that 24.6 base. So a 352% improvement in cash flow provided by operating activities. Kevin, I just saw your comment. What marketable securities did they dip into? Those are T-bills. In all likelihood, it's possible. It's possible that they bought stocks, but if you read their 10Ks, and they might show it in their 10Q as well, it's just any security with a duration longer than like 6 months or longer than maybe even 90 days. So it's probably just locking up some T-bills. Yeah, you can see it there. Purchases of marketable securities. So they just took some cash. When it's a T-bill that's short term, 1 to 3 months, they just get to call it cash. They don't have to say that they purchased those T-bills. But when you get a T-bill with a due date that's longer than 3 months out, you call that a purchase of a security. It's no longer considered cash and cash equivalents because it's long-term cash, but it is still like for my intents and purposes, it's still cash, right? But technically, right, if something happened and GameStop needed $8 billion today, it's like, well, dang, we just locked up 1 billion of it and we won't get it for a few months. You know, you're giving a loan to the government basically. So it's not quite as liquid. Ooh, check this out, guys. That's a line that's never been there before. Y'all want to read that? Investment in collaboration agreement. That's exciting. This is $15 million that GameStop, in all likelihood, paid to PSA or invested in their agreement with PSA. Really excited to crunch those numbers in some future videos, learn what we can learn from that. And then there you go, cash flow from financing, nothing too exciting. Cash and cash equivalents coming down, but really not, right, just some long-term T-bills. Dr. Capetto says, how do we know if the change is a T-bill, not a business? We'll know when the 10Q comes out, which is not out yet, right? It is out. Well, that's exciting. You can hop over there in a minute. Let's finish this blurb so that we can look at the highlighted line items. This is, that's crazy. Look at that. A year ago, their trailing 12-month operating income, trailing 12-month cash flow from operations was zero. It's 290 million cash flow from operations. Crazy. And you can buy this company for 25% less than what you could buy it for a year ago. Isn't that crazy, guys? This company cash flows at $300 million more and has $4 billion more in assets, and it's worth 25% less, at least as far as what you can buy it for right now. Incredible. Okay, the rest of those cash flows. Great. Yep, all that's the same. Okay, let's check this out. The sales mix. Wow. So hardware and accessories at 367. I mean, wow. I'm excited. So in a future video, I will kind of take these numbers that we know, right? The revenue numbers as well as their margins, and we'll be able to figure out basically what happened, right? Where what did what? You know what I mean? And the most likely culprit is obviously related to new consoles being way lower than what we thought, what I thought. 197.5 on software. I'm all over it on software. I mean, holy smokes on the hardware and accessories, right? $270 million less than expected from me. And again, like I thought good chance I'm still high, but I didn't think I'd be $250 million high. Now, if you're a GameStop investor, is it like, oh no, Ryan Cohen's doing horrible, it's all over, like it's like, well, Nintendo, when they reported their Q3, and they reported a decline, right? They said, hey, we sold fewer Switches in Q3 than we did in Q2. And by the way, Q2, we only had the Switch available for 1 month. And in Q3, we had the Switch available for 3 months. And still in the Q3, we sold fewer of those units than we did in Q2. Obviously, I should have taken that warning much more seriously as far as the implications for GameStop in Q3. But what did Nintendo also say in that earnings report? They said, we are raising our guidance for the 1-year sales of the Switch 2. That actually we are on pace to sell even more than what we thought, which was already a raised guidance, right? We've already raised it once. We're raising it again. What does that mean? It means that Nintendo was expecting and seeing that early signs in their Q4 are that the Switch 2 is crushing. So, okay, 625 for hardware, way too much in Q3. But is that a sign that Q4 and beyond is screwed? No, it really just means like a lot of the numbers that would have shown up in Q3 are basically getting pushed into Q4. I will make official estimates in a much later video as far as Q4. I doubt it is at 1,000 or like $1 billion, 1,000 millions, but it's still surely substantially higher than the 592 from Q2. Now, some of y'all, some of y'all in the comments are like talking about the macro economy. Like the Switch 2 is expensive. It's a tough time for people. There's not a lot of money out there in the world for Main Street people. So of course, like, yeah, maybe Switch 2 doesn't ultimately end up selling as much as people want or what we want as GameStop investors, but it is the fastest selling console ever. And Nintendo has only raised guidance multiple times since they released it. So it's not necessarily concerning, but it is a bummer, right? You thought you'd see some of that in Q3, but now it's going to be, okay, well, how much does it recover? How much does the economy suffer, right? Are people able to afford this console? And then how many new games, et cetera, come out for it? Software, we were all over that 197.5. So you are seeing the demand for Switch games grow, right? As people get the console, they then buy games, which is great. Collectibles at 256 is basically right around where we had modeled it in our first video before Ryan Cohen's interview. I say we, this is all me. I'm not trying to I'm not trying to hold y'all responsible for my projections. But the first collectibles video I made, I don't know how long ago it was, modeling their sales. I wonder actually if I could find it real quick. Hardware. There's hardware. Lego and Pokemon. Maybe it was a live stream. Q3 collectibles business. I think it's probably this one. Where did I end up in this video? 260? So somewhere 260 to 270 was where I was having my conversation for what I expected for their collectibles business. And the revision up to 475 was 100% based on Cohen's interview when he said collectibles are going to be just about a third of total sales. So my original projection was actually really close. My original hardware projection was way off. I did not expect this much pent-up demand in the first quarter of Switch 2, and I didn't expect that much of a drop-off in Q3, but I do expect Q4 to be meaningfully higher than Q2 as far as their Switch 2 sales goes. And then we'll see kind of where it levels out in Q1 and Q2 of next year. But overall, console cycles, if you study console cycles, the average arc, like in year one, they sell X. In year two, they sell 1.2X. In year three, they sell 1.5X. In year four, they sell 2X. And then they start coming down after that. So Switch 2 sales are not like, oh, wow, they hit this one quarter. It was so great. And now they're going to be so bad forever because they only sold 367. It's like, no, the actual year over year Switch sales are going to increase for actually multiple years. And other new platforms are being created, right? Other new platforms are being created. The Xbox handheld, and then, of course, the next gen Xbox and PlayStation. And the more consoles that are created, that stimulates demand for the used console market. It increases the total amount of consoles in America, right? Whether they're in households or in GameStop stores. Every new cycle, it doesn't all of a sudden evaporate all of the old consoles, right? And so the more consoles that get produced, the more consoles that can then be sold and resold to and by GameStop, which helps their used business. Overall, main takeaways for me are that basically before Ryan Cohen's interview, we were right on the money, a little bit over with collectibles. Software, we were right on the money, a little bit over. And then hardware, we were way over. And the main learning lesson is basically as it relates to Nintendo's earnings report. We should have taken more weight with that. I should have taken more weight with that. The collectibles coming in at 256, right? Circle back to this interview with Ryan Cohen. Just about a third of total sales. In my mind, right, the conversation basically became, unless you think that Switch 2 sales are going to fall off a cliff, necessarily, whether it's between Q3 or Q4, we're going to see about 1.5 billion in collectible sales. Well, all of a sudden, it's like, Turns out in Q3, the Switch sales did fall off a cliff, and so all of a sudden the implications of the conversation are like, well, dang, power packs aren't going to be quite as explosive, quite as quick as we wanted. Of course, Q3, it's just in beta. It was only Pokemon and football, right? They did the lunar packs with Pokemon. Now they have basketball and baseball in there. Of course, the overall trajectory is nice. And what I shared in a video recently is if I'm way high in this collectibles number, it probably just means that I'm low on this collectibles number. And so anyways, if you took back of the napkin math, you plug in this 367.4 for hardware, not 237. You put in the 197.5 in software, and then the 256.1 in collectibles. What does that mean for full year? Well, if Q4 is somewhere around 225, I haven't actually run estimates for Q4 yet. Let's say that Q4 on the Switch is something like 800. That would put, what, 38% of full year hardware sales happening during Q4, which is about right for the first year. Maybe at 750 if we want to be more conservative. What does that mean for the collectibles in Q4? Well, just about a third is relative, right? And I think if 256 was the number in Q3, Q4 is definitely, I guess, probably not 650. It's probably not. It's probably, I mean, what's this number, right? What now, if they do 650, that would be 32.41%. If they do 600, that's 31.6%. If they do 550, that's 30.74% for the full year. Could it be even lower than that? Could it be as low as 500? Possible. The biggest bummer about the hardware coming down is the de facto implications on collectibles that ultimately, even at 256, during this quarter, we're 31.2% of sales. And maybe that's close enough for Cohen to say it's just about a third. Or maybe the percentage will actually tick up in Q4 compared to Q3, which right now, if it's 500 in Q4, and this is the business for hardware and software, then I do have it ticking up close to about 34% of the business in Q4. But again, if Switch is actually more like 850, again, all of a sudden that kind of changes the implications. And now you're thinking, well, this might have to be 550 for that to end up averaging out, etc. We'll dive into that when it's time. But overall, power packs might very well be a very blend partnership with PSA and GameStop. It might not just be GameStop gets the lion's share of the money and PSA is getting a little fee. I mean, think about it. 260 to 270 is where I thought collectibles would be. That was based on about a $10 million power packs number, which was basically based on PSA getting far more of the pie and GameStop getting a small fee. But we know GameStop paid PSA $15 million in Q3. We saw it. We saw the collab, right? 15 million went to PSA. And maybe maybe it's a genuine 50-50 split partnership. Like all the revenue, all the costs, here's the net income. Honestly, eyeballing it, that looks like maybe the most accurate, which is super interesting, right? It really looks like it might just be 50-50. Y'all made 15, we made 15, and then the remainder, right? GameStop's legacy collectibles business, maybe at like 241, right? That's probably ballpark pretty accurate. But it also means that the margin conversation is it's not a dichotomy, right? It's not like who gets the low revenue, high margin money and who gets the low margin, high revenue money. It's very much like we're in this together, we're splitting it 50-50. Looks like maybe a lot of GameStop trolls in the comments. Pretty exciting to see you guys here. Thankful for y'all. Cheers, and hope you brought your popcorn. What does this mean for trailing 12-month PE? Yeah, we got to dive into that too. I mean, so many videos to come, so much content to come. We'll see how much we can cover. SG&A, look at that decline. I mean, that's just beautiful. So there's all the adjusted numbers. Let's dive into the 10Q. If I what I want to do is see if you will tell me. I guess it doesn't really matter. Okay. I think this is what I want. Oh, geez. Here we go. So if you do it this way, then the red lines will tell you anything that's changed, right? Obviously, all the numbers will change, but this will help us identify anything else within their kind of company statements, business strategy, etc. If they've changed any of that. They changed their telephone number, or the registrant did. You know, so fun to see that. Okay, so here's all the numbers, just like we talked about. PP&E continuing to come down. I mean, you got to love the leaner and meaner business. Every quarter leaner and every quarter meaner. What's up? What's up? You got to love current liabilities coming down. Another $165 million. That's on a year-over-year basis, right? Yeah. Gotta love it. Long-term debt, that's all convertible debt. Gotta love it. Okay, here's the 3-month ended numbers. The sales decline, right? If you actually look at sales per store, right, Q3 of last year, again, was based on what, about 3,200 stores? I forgot already. 35. So they were doing about 250,000 in annual sales per store, or in sales that quarter. $250,000 in sales per store, Q3 of last year. In this year, you are at 360,000. So sales per store is up 30% year over year. You're not going to see that in an article, but you're seeing it here because you're here. You're here. Thank you for being here. You're seeing a 30% improvement in sales per store year over year. Dramatic. And what does that mean? Does it mean people are coming to stores all the time? A little bit. It means more than that. It means that more people are shopping online at GameStop, right? And it also means that maybe that's all it means. I think that's the main thing. It also means that the decline in stores is not one for one declining GameStop's customer base, right? Customers are just shopping, right? It does, you lose some customers, no doubt, but you're keeping more than you're losing. Every time they close a store, they're consolidating their customer base. More people are shopping online, and more people are willing to drive further to go to their local GameStop. You got to love it. The net income improvement, massive, massive. I mean, this interest income is a huge swing that I'm sure if we're reading a bearish article on GameStop, they're going to say like, look, net income's down to 77 million when what was it? It was 168 and now it's 77. Oh, that's so horrible. you know, and it's like, no, that was last quarter. Okay, you always want to look at the quarterly numbers, right? The year over year, Q3 to Q3. But the operating income is going from negative 33 to positive 41. And even that positive 41, so much of that is impacted by asset impairments, right? It's really 53. It's really 53. And once they finish selling after Q4, their underperforming France business. And so 53 from negative 33, what's the math on that? It's $86 million improvement. And on a percentage basis, that's greater than a 200% improvement, right? It's huge. And so the interest income, right? The same bears that are going to say, look, net income is down. Those are the same people that were like, you can't count interest income. You can't count that. You can only look at the operating income. Those same people are going to be like, you can't look at the operating income. You have to look at net income. Look, it's lower than what you thought. It's like, okay, yeah, lower than what I thought, but also 350% higher than a year ago. So like, man, that sounds so bearish. Like, it's over. The company's never going to transform. It's only growing 350% year over year in income. And I just can't handle it. Like, of course, you want the transformation to happen faster. Of course. I want that, of course. I wish I wasn't so dramatically wrong on the hardware numbers. And I wish I hadn't raised my collectibles numbers so high after Cohen's interview. But if my hardware numbers were lower, like if I knew that was happening and I could have known that, I could have taken that Nintendo earnings report more seriously, then I could have known that collectibles wouldn't have been as high as I thought they were going to be. So anyways, of course there's some like, oh dang, and the stock, whatever, down 6%. Oh no. It's not like I didn't find it more like I thought it was more likely than not that it would not be until after Q4 comes out that we are reaching the melt up situation where all of a sudden GameStop is pushing 28 and then 29, 30, 31, 32, and then 35, etc. So am I sorely, severely disappointed? No, I am not. And also, as a long-term GameStop investor, it's always a little nice when GameStop is crashing right after earnings because it just makes you feel like the possibility for a pop is that much higher. Often it's popping after earnings only to set up for a rug pull. And so if this is it, oh no, a 5% decline, and that's it, and we're going to continue tracking up as earnings are continuing to grow year over year, operations continuing to grow, costs continuing to come down year over year. Like, okay, cool. I was prepared to wait. This Q3 was not the pinnacle apex moment for GameStop. Like, this is the first quarter that GameStop is reporting on a beta partnership, right? Like, this is just the beginning. Just the beginning. So, like, Honda Game, I'm sure he's probably a troll. He says, biggest waste of my life. You know, it's like the life of GameStop's fundamental turnaround just started. If you've been waiting for the technical squeeze, then you've wasted almost 5 years now, but it might not be for a waste, right? It could still happen, but it's been a long time waiting. If you've been talking about the fundamental outperformance, you've only been waiting like 5 minutes. Like, you've been waiting 5 minutes. But of course, I'd rather only have to wait 1 minute. I know you're just trolling, but hey, you're still probably a human. What else we got? Okay, we've been through this. Anything else they said? I'm super interested. Okay, so they officially took out Canada. It's 3 instead of 4 segments. Consolidated statements. Nothing really new there. Maybe they added a language because of the PSA partnership. Here's what I'm referencing, guys, when I talk about the 90 days. Cash and cash equivalents are cash, money market funds, cash deposits, and short-term debt instruments with maturity of 90 days or less. So anything with a maturity of greater than 90 days is considered a security. Based on Cohen's interview, I'd be shocked if they decided to buy. Look, here they say in their investments, we have invested some of our excess cash in investment grade, short-term fixed income securities, which primarily consist of U.S. government and agency securities, as well as time deposits. Such investments with an original maturity in excess of 90 days and less than 1 year are classified as marketable securities on our condensed consolidated balance sheets. So they did not buy a business. They did not buy stocks. They said, we have bought some long-term debt, right? Just like I said, but there it is for you in the 10Q. Still expected to be completed within 1 year, right? They changed that. It used to say by the end of the year. And then they decided, actually, we'll just hold on to France for the holiday sales and then we'll sell it. But they will still sell it within 1 year, according to them. Okay. That's all the same. Just updating the numbers slightly. Digital assets still hold the same number of Bitcoin. Great. Here's the warrants. 0% interest on them. Great. What other nuggies we got in here? Each warrant entitles them to purchase a share for $32. They will expire, they say. So they are extendable. They are extendable, but GameStop is saying the warrants will expire. Jeez. Okay, I won't highlight it. The warrants will expire and cease to be exercisable. I find that bullish. It's basically the company saying, we are not going to extend this. In other words, we are going to be worth in excess of $32 per share by October of next year, which we've talked about plenty of times, right? But the management is saying, like, don't even price in the extendability feature of the warrants. Like, we're going for it. Yeah? Yeah. Fixed number of shares. Estimated the fair value of the warrants using the Black-Scholes option pricing model, using these features, volatility at 50%. Estimated fair value on issuance was 294. So the aggregate value, there's $174 million worth of warrants out there. Of this fair value amount of the warrants, 42.2 million was distributed. Oh, okay. Because GameStop had to issue the warrants to the convertible buyers, which GameStop had to do, because there's a term within GameStop's convertibles that basically, if anything meaningfully changes with their stock, then like if they were to offer something to stockholders and not offer it to the convertible bondholders, then the convertible bondholders have the right to demand the money back, basically to opt out, or and GameStop does not want to give the money back yet. They issued these convertibles because they want to use the money at 0% interest. So if you want to use the money at 0% interest, then hey, if you give a warrant to all of your current shareholders, then you also need to give the warrant to the convertibles, to the convertible buyers, or convertible lenders, I should say. But because those shares don't actually exist yet, that 42.2 million is basically like accounted as an expense to GameStop, even though it doesn't cost GameStop anything. So it's super interesting. It's just like an accounting reality, not a real cost of business. But the 131.7 of it was distributed to stockholders. Because the stockholders are holding stock, all of that happens within the equity of the business. But because this 42.2 is happening within the liability of the business, that's why it's considered an expense, right? The stockholders are equity. The bondholders are debt that will be converted to equity, but right now they're debt. And so the value of the warrants that was issued to the debt holders is considered an expense from an accounting perspective. So anyways, as a long-term shareholder, again, short-term bummer for the numbers to be deflated by $42.2 million. And it actually means that the interest on their cash, earlier I said, like, whatever I said about the interest income being much lower than expected, and they must have locked up a lot of that earnings power into longer term debt securities that are not going to produce as much. It's really actually, like, what's more true is, hey, that 92.9 that we thought they would earn, it's 92.9 minus 42.2. Like it's an interest expense. So their total interest income of whatever it was, 40 something, wherever it was. Where is it? Interest, $49 million of interest income. That number, so the minus 42.2, 49. So that means they actually made a lot more on their cash than what I even thought. Oh, Well, they put the Bitcoin separately. Okay. So I thought they made 92.9. I thought they would make 92.9 in cash from their cash, but they actually made 91.2 in interest from their cash. Okay, that's awesome. I was a little bit concerned earlier, like why are they only making 40 million from their 9 billion? You know, like I don't understand that. And they did make 90 billion, or sorry, they made 91.2 billion in interest from their cash. On a one-time basis, they had to deduct 42.2 million from that. So again, earnings, the net income looks a little low when they say whatever they said, whatever the number actually is, 77.1. But basically it's like, well, add 42 to that right away. And then you could also add another 11 for the Europe asset impairment. And all of a sudden you're sitting pretty. But again, those numbers we talked about earlier, like the 350% growth in net income year over year, like that wasn't even adjusting for the warrants, which honestly, I feel like in my spreadsheet, I kind of do want to adjust for the warrants, but at least with how I value the company, I will adjust for the warrants because I don't care about that technicality on an equity, a cost in their equity that's being accounted as a cost of doing business when it really is more of a financial expense, not a business expense. Regardless, what else do you want to tell us? Nothing's new here. Bummer. Warranties. Great. Subscriptions are down. I wonder if that's primarily a GameStop Pro. So perhaps GameStop Pro is actually a little lower in how much money it's making than a year ago. I don't know. How's the stock doing? Just hanging out. Just hanging out. How are you guys doing in the chat? Just hanging out. What's up, everyone? What's up? What's up? 500 you guys in here. Welcome, and I hope you're learning something. Let's keep going. Let's keep going. Gift cards, nothing important. Here's all about how they measure the value for their warrants. The marketable securities, again, another question or two on that in the chat. It's just T-bills. It's just long-term T-bills. And long-term means anything longer than 3 months. That's all it means. Nothing exciting and nothing scary. Just making some money. So there's the impairment. Here's the warrant. The company estimated the fair value of the warrants. Okay, we saw that. 294. 42 the convertibles. Great, we saw that. Outstanding debt. There's convertible notes. We know all of this. Nothing too exciting there. Yep, all the same stuff. All these are underlined not because of changes, but because they're numbers. As far as why they inline that. Commitments, letters of credit, EPS. Here's how we calculate it. Here's the dilution. I've talked about this before, but the diluted float as reported by GameStop and every company is the weighted average diluted float throughout the quarter. It is not the diluted float as of the end of the quarter. So if you wanted to calculate diluted EPS, let's say they don't issue any more warrants and the diluted float that they've already done is already done. the diluted float is actually 650.5. 650.5 million shares is how much dilution GameStop has already communicated when you add in their convertibles and their warrants. But the warrants were not issued until October, which is the final quarter in GameStop's Q3, which is why their weighted average diluted float is 591.7 on this particular 10Q. But if they didn't offer any more warrants, that number next quarter would be 650.5, because in that case, all of the dilution will have already happened. If they issue more or there's any new warrants, then that'll continue to tick up on a weighted average basis until they're done. And then you finally have the weighted average equals the present diluted float. Hey, thanks, Pragmatic. He said, seriously, thanks for running through all this information. You're really helping a lot of us out. I appreciate it. I do appreciate it. Yeah, I mean, it's tough. Like I thought, I don't know what I said earlier in this stream, like high chance that we break 26. And it's like, well, not today. We'll see. We'll see like how the week ages. When I record this stuff on the historical valuations, I like to take the market cap at Friday's close after the filing. Like once the market can digest this information, where is the market putting the shares? And then we'll look at TTM and PE here in a second, because I'm really interested in that. But I want to finish we're almost done with the meat of the 10Q. Of course, in future videos, I'll be distilling this down further, helping you guys understand it further. Nothing concerning. The biggest differences from what I projected are: one, Nintendo Switch 2 did not sell nearly as well as I thought it would. And we could have and should have, I should have known that based on Nintendo's earnings report, but I just couldn't believe it, But if we're basing it on Nintendo's earnings report, then again, we're also expecting a very strong Q4 for the Switch 2. So a little bit of lumpiness, some cyclicality to the hardware numbers. But when you look at the annualized hardware numbers, in particular hardware per store numbers, you're going to see some impressive year over year numbers. The other big difference is power packs, not as large as I anticipated, and higher margin, much higher margin than I anticipated, and much more of an even split between PSA and GameStop than I anticipated. As far as the long-term value of power packs, I don't think it's, I'd say like overall, it probably limits GameStop's scale. Like the upside of GameStop's power packs valuation is probably a little lower if it truly is a 50-50 split partnership. It means that more of this is going to have to be shared with PSA as far as their collectibles numbers. But it also means that these margins are all going to be much higher. So you're going to see a higher number that's possible, but a lower revenue, higher margin. And then you're going to see that basically shared between GameStop and PSA, not just GameStop, maintaining the lion's share of the value and then just giving PSA a cut. It sounds like PSA was able to negotiate better terms than that. And obviously, GameStop interested in the partnership as well. And so it's not like they are trying to strong arm PSA either. But it's a win-win for both. PSA doesn't want to have to open 1,000 stores, right, and build a truly customer-facing brand to encourage more submissions. And GameStop doesn't want to try to build its own grading company, because that creates inherent conflicts of interest if the retailer is also the grader. And so they're both staying in their lanes. GameStop is the retail expert, PSA is the grading expert, and the rising tide is lifting all ships, but not as dramatically as I thought, and much more of an even partnership than I thought. Oh, great. This whole blurb is, we do not expect this to have an impact on us. Great. Related party transactions. One of the company's directors, Nat Turner, also serves as CEO of Collectors Holdings, which is PSA. As a result, he's considered a related party. Great. The company announced on October 15th that it had entered into a collaboration with Collectors through its PSA division. Under this arrangement, the company became an authorized PSA dealer, and PSA provides authentication and grading services for trading cards through select GameStop stores across the United States. During the second quarter, the company launched Power Packs, a digital trading card platform developed in collaboration with PSA. Transactions with Collectors and PSA were not material individually or in the aggregate during the current fiscal year. Transactions with PSA. Very interesting. It's not saying that Power Packs did not have material sales. Surely, I'm pretty sure they're not saying Power Packs did not have material sales, although we know that Power Packs didn't have crazy sales. I mean, for sure, no matter what way you slice it, Power Packs did not do 100 million. I think it's just saying like the amount of money being sent back and forth between PSA and GameStop was not incredibly meaningful, which is probably a nothing burger. I think that doesn't mean very much. Overview. Okay, so this is still here. Business priorities are unchanged. Their strategy still involves, number one, using cash and other sources of liquidity to maximize shareholder value, including through potential investment and or acquisition opportunities. So GameStop's primary business, the first thing they are trying to do is grow their asset management business to utilize money. They haven't deployed it yet, but they are interested in raising and deploying cash. Number two, optimizing their retail business. That's what they're up to. No change there. I was interested to see if they might change the verbiage slightly on point one, but they are not. It's right there for us. Investment policy, all the same. Business, omni-channel, right? Online and physical. Continue to achieve profitability, expand their market. Here's everything they've done with that. Nothing new. This is one of my favorite lines. This has already been there. It's nothing new. One of my favorites. Anticipate closing a significant number of additional stores in fiscal 2025. Now, I know you're thinking it's not new, right? They've already said that. Well, guess what? They just released this as of the end of Q3. Guess how many months are left? 3. They have already closed at least 1,000 stores, or up to and around 1,000 stores in 2025. And they're saying that we anticipate closing a significant number of additional stores in 2025. I mean, crazy the cost cutting. We're also trying to grow our addressable market. On October, oh, that's 2024. Great. Launch power packs. This is not new text because they did actually release it like with 1 week left in Q2. So that verbiage was in there in the previous 10Q as well. And then here we go. Consolidated operations. Really healthy gross profit. I mean, it basically like if we think about their hardware business, in Q2, their hardware did 592 and probably something like, I had estimated 325 of that was new consoles off of the 153 in Q1. Probably used and accessories were actually much lower than this, right? These 135 and 126 that I modeled for Q2, probably a little too high. And actually, an even larger portion of this growth in Q2 was probably new consoles, which would make sense because I had to rate, like, the margins on the grading business are probably not quite this high. I had them a little high there. And anyways, the sales in Q3, basically a vast, for profits to go all the way up to 33.3 after being all the way down at 29 the quarter before, like a vast majority of that sales drop off is switch to drop off. Obviously, switch to is still there. So the sales aren't, like, the margins aren't as high as they were in Q1, 34.5. They're much higher than they were in Q2. Much higher. Way fewer switch sales in Q3 than in Q2. I mean, a huge drop off for this gross margin number to be 33%, which it is. This is 270 or whatever. What's up, Jonathan? Thank you for the super. He says, thanks for the consistent, excellent analysis, Jeremy. I'm as bullish as ever. Thanks, Jonathan. Seriously, thank you. It means a lot. All the earnings go to DRS Book GME shares. So if you're a hater that's in the chat right now, don't give me a super, okay? Because I'm going to be locking up the float with it. I'm going to be locking up the float. Budget for life together. But thank you, Jonathan. Seriously. Yeah, a lot of information to take in, and then you kind of worry about your emotions like after the data, But it's like before you react emotionally, you want to make sure you understand what are you even reacting to, right? Because if all you do is react emotionally right away when earnings are released, and when a troll comes in the comments and says, "Pointless company, this company does not have a point." Sorry, Dwight. Like when someone says that and you're reacting emotionally right away, it's a sign that you are stuck reacting to the stock instead of actually reacting to the numbers. You don't want the trolls and the ticker to skew your emotions. It's like, look at the numbers, understand. And then you can start to act, like, have emotions that are in line with reality instead of just like emoting all over the place. Overall, like, again, I'm still kind of going through it. I'm going to keep sleeping on it. I'm going to be chewing and dissecting these numbers for weeks and weeks. But from what I've seen so far, it's just like, okay, this is definitely not a sexy quarter, but definitely not a break of trend, right? When you think about what's happening with GameStop and the transformation that's underway that Ryan Cohen's leading, like when you see operating income and net income continuing to grow by hundreds of percent year over year, it's not bearish. Like it's like, okay, we're still moving in this direction. We're still growing. We're still improving. We're still cutting costs. And there's still easy money on the table, right? That $42 million in interest expense from the warrants, easy to write that off. The $11 million of asset impairments, easy to write that off. The other like 10 or 12, whatever it was, operating loss between France and Australia, easy to write that off. Like all of these one-time costs related to closing the stores, easy to write that off. I'm not saying write it off like pretend it doesn't exist right now, but when you start thinking about the direction of the company, it's like these are so many headwinds that will be cleared. Like GameStop is not going to have those dragging down their sales numbers nearly as much a year from now, and then not nearly as much a year from then. And so the ramp is actually that much longer, right? The runway for GameStop to continue to improve year over year in their operating income and net income is much higher because of all of these one-time suppressions, one-time impairments to their numbers. And it's like, man, we took 60 million of operating losses from businesses we're waiting to close and impairments and warrant stuff. Like that hurt us $60 million. Like that took out 40% of our net income. And our net income is still hundreds of percent higher than it was a year ago. Like, holy smokes. You know what I mean? Like, it's not sexy, but it's steady and it's in the same trend, the same trajectory, growing profits and growing in terms of a full year basis, like a sales per store basis, growing the top line in an efficient way. But again, 30%, 35%, maybe 40% fewer stores now than just 1 year ago. So if you're saying, oh man, the sales came down, it's like the sales came down like 10% or whatever the thing is, you know, and the sales per store, therefore, is going up dramatically, right? 5% or so, right? A $40 million decline in top line sales, but actually a 30% plus improvement in sales per store. So GameStop is making more money, obviously on the earnings basis on the bottom line, but also on the top line. They are generating more revenue more efficiently. Okay. What's the PE? What's the PE? Let's talk about it. Let's talk about it. What's the PE now? Let's see. Go back up. After Q3, their cash is right around. So where did I put it? Where is it? 7,842 plus 986.9, 7,842.7. Remember that. 7,842.7, 7,842.7 plus 986 plus their Bitcoin. I was all over the Bitcoin. I'm just saying. I crushed that thing. That was amazing. my best estimate of the whole thing for sure. My cash was also all over it. Interest income, I mean. Okay, where are we? Going to projections. So that's taking that number, right? AH3 AH3, boom. So here's their net cash. If you were to fully take out their convertibles, right now their enterprise value is that taking into consideration after hours. No, it is not. So right now, if they're at 2185, let's just write that in for a second. That gives them their current enterprise value is 4.6 billion. Their trailing 12-month operating income is right the 79.8 plus, or I should say minus 10.8 million from Q1 plus 66 million in Q3 plus is that the 3 months in? Yes, 9 months ended. 3 months ended 41.3 million in Q3. So technically, their trailing 12-month income has improved by 70%. Again, bears will say, oh man, you thought it would be more. It's only up 70%. This company is screwed. Yeah. Just show me the list of companies that this quarter have improved their trailing 12-month income by 70%. But this 177 and this 102 both include impairments from France. So let's leave France in there. But it also includes this 42.2 million of interest expense from the warrant. So their real trailing 12-month operating income is like 220. So, over a 110% improvement year over year, almost 120% improvement. And if that's the number you use, then their PE at 2185 is at a 21, which is low, but not like grossly low. One of the it's grossly low when you think about the forward 12 PE. 2185 is grossly low. Like, it's very fundamentally appealing to think about scooping up every share on the earth at 2185 from a forward PE basis. But if you're only looking from a trailing PE, which the reason I did these was just to entertain the bear argument, right? If you only look at their trailing 12 PE, and if you only look at their cash as if it's all netted out right now, right? Forget about the fact that they're going to make money with that cash. Just pretend that all the money goes away, all the interest income goes away, right? And they have to pay back all the cash right now, right? That still puts them at about a 21, which is low. But it's not grossly low yet because digital power packs was not as much of a booming revenue number as anticipated. So part of the reason why GameStop's PE, its rightful PE, should increase is, of course, just related to its fundamental outperformance, right? Its year-over-year growth numbers as a retail business should command, like, a fair value of that would be higher than a 21. But historically, specialty retailers don't have substantially higher than a 21 PE, but also they don't usually have explosive earnings growth. Like, these are like super established businesses with no particular trajectory or upside, but even they have higher PEs than a 21. But once GameStop's digital power packs really begins to scale, if and when it does, that only enhances the fair PE for GameStop that much more, because those digital power pack sales are not specialty retailer sales. Those digital power pack sales are more like online gambling type sales, which is bullish for how you would value it. So all that to say, their PE right now, if you net out the warrant interest expense, because it literally is not even a cost to GameStop, then you'd say their current PE on a trailing 12-month basis at a 21.85 is a 21. So all that to say, if you were to say, well, I don't care about the fact that the warrants money didn't come out and it's really just an accounting technicality, I'm only going to go off of the trailing 12-month. Then you would say, well, the current PE at 21.85 is 26. 26 PE. Is that fair? Yes. I mean, it's low. It really, like, these types of growth numbers are ridiculous for a company, for any company. These types of growth numbers are crazy. And so you should have a premium PE, even though you're a specialty retailer. You should be able to hold down far greater than a 30 PE on the overall business, because the runway for increasing growth and efficiency and profitability is very, very clear. But if you're talking about the floor, well, the floor is probably still slightly lower than 22, right? The floor used to be, like, a quarter ago, the floor was 15. And now it's like, well, the floor might be more like 19 or 20. I didn't think that was in the cards. Like, I didn't think sustaining back down at 20 was really possible. But because I overestimated Q3 as substantially as I did, it's like, yes, it could be back at 20. It doesn't seem like it's able to yet. It's still at 22. Obviously, you want it. We're all excited for the appreciation, right? But I think anyways, putting the warrant money back into their operating income is a much more accurate and fair way of assessing the performance of the business. And what the stock is doing as far as issuing warrants does not have a 26% hit on their trailing 12 operating income. It's literally a non-cash technicality, And so if you put that 42 back in there, then you would say, hey, the floor price is actually 21. And it's like, well, good luck getting it much lower than this. And again, who really cares? Because again, after Q4, now you're looking at another 100 million plus in trailing 12-month operating income added to the TTM. So the overall trajectory is exciting. But not as exciting as quickly as I had modeled. Overall, still in a great trend. Still in a great trend. Anything else from the 10Q? So anyways, does that make sense on PE right now? Really, like, it's kind of annoying because this $42 million swing, that technicality from the warrant thing, again, it's just an accounting technicality. That's going to sit there, like, that discrepancy is going to sit there for a year because it's tied to their Q3. So for a year, bears are going to say, as it relates to their net income, they're going to say, no, they only made 77, right? They only made 77 that quarter. And, right, they only made 77. And anyone that's being fair about the company is going to say, no, they made 77 plus 42. They made 120. or 119.3. And that's not even talking about the asset impairments, right? But they really made 120 in net income in Q3. But for a year, we're going to be arguing about that $42 million. And 42 million is a like, that's a big number right now. It's going to mean less every quarter, right? As this total number grows, it's going to mean less and less, that 42. But it's not going to be until after Q3 comes out next year that we can finally put that $42 million accounting technicality behind us. And hey, if I've waited 5 years, I can wait 1 year. You know what I mean? I'm not stressed about it. It's just like a little annoying that I'm going to have to hear crazy people in the chat be like, actually, you haven't looked up the business. You forgot they have convertible debt. You can't count. The cash doesn't exist. Anyways, I like the trolls. Thanks for being here. What's up, Don G? Welcome to the friends of the channel. Man, exciting. Don G 13812. What a name. What a name. Congrats, Don, for becoming a friend. Shoot me an email. There should be a post, a member-only post on my channel that shows you how to get access to the sheet. Super thankful for the support. Inline. So anyways, as far as the PE stuff goes, right now, there is still, as bearish as it is, as pessimistic as it is, there is still an argument that GameStop right now is quote unquote fairly valued at around 21 from like a floor, like the most pessimistic way you could look at it. Now, bears are going to say, like, not true bears, but like the trolls are going to be like, it's only worth 12, just because that's what they like to do, but like, if you're being serious and you are seriously bearish, you can argue that you're not going to bake any forward growth in. You're only going to look at TTM. And if you're a very conservative investor, that's up to you. You don't have to bake in future growth. And Dwight, it's worth maybe 10. Thanks, Dwight. It might be worth 10. I would just love to. They've got 10 billion in the bank and they might only be worth $5 billion. I know, but the convertibles. Oh, geez. Anyways, sorry, I'm being a punk. You could make the bearish argument that they're only worth 21 if you don't look forward and you don't make exceptions for their one-time impairments. They've had impairments in other quarters too, right? Q1, they had impairments. Q2, they had impairments. In Q3, they've got impairments plus the warrants, right? So if you don't remove any of the one-time costs, you only look at the trailing 12-month earnings. You do not value the trailing 12-month interest income, right? You only look at their operating income. Then all of a sudden, you continue to treat GameStop purely like a brick and mortar specialty retailer. Then again, you could make the argument 21 is fair. You could even, again, make the argument that even maybe 19 is fair. Because that 42.2 is really not operating. It is net income, but it's really not operating. And so their operating income, I messed this up because I used their net income for that number. I used 77.1, but really I want to look at operations. Geez. 41.3 is really the more accurate number. So take everything I just said, then lower the numbers a bit. 41.3 is what is added to those numbers that we just looked at, not 77. So this number is 41.3. You don't care about the one-time stuff. You're just looking at that. Plus 66.4 minus 10.8 plus 79.8. Oh, no, that is what I did. Right? Yeah, 176.7. Okay, great. Great. I did that right. Don't worry, guys. 177, your trailing 12 month. If you were to factor in the asset impairments, again, you might add about 25 million from just all of the asset impairments from the past couple quarters. But could you say that even as low as 19 is quote unquote fair? Yeah, for 4 more months until their 10K comes out, you can say that. I think that's a crazy way to value it. Like, I think it's crazy to look at a company that's fundamentally transformed and to look at a company where two of the 4 quarters of this trailing 12 month do not even include the Switch 2 sales. 3 of the 4 quarters do not even include the digital power packs. I think it's crazy to treat that as the gold standard for how to value the company. And I also think a PE of 20, substantially lower than the majority of the specialty retail industry and substantially lower than any company that's growing at the type of clips that GameStop is growing on a year-over-year basis. I think all of that is crazy. My fair value is not anywhere close to that. It's much higher. And I'm excited to update my fair value estimates post this Q3 earnings. But if you want to make that argument on the bear side of things, yeah, be my guest for a couple more months. Overall, the transformation, the explosion of digital power packs is not as dramatic as we thought, but the transformation is still well underway and it's starting to gain steam. Like, it's picking up in a pretty exciting way. Negative Banana says, "Hey Jeremy, just got off work. What did I miss?" Oh, digital power packs is not part of the revenue. Well, super excited to get there. That's what some people are saying in the chat. I still got some 10Q to go through. Let's see what we can learn. Boom, boom. Okay, sales for the various places. I mean, if 256, if that does not include any digital power packs, I don't know if that's true yet or not, but again, that's right about where I had GameStop. Like 260 was what I projected collectibles to be before digital power packs. And then once I factored in digital power packs, I said, I bet that bumps it to 271 before Brian Cohen's interview. Interest income. Uses of capital. At the market last year. Each warrant. Yeah. Look at this. This is so wonderful. During the 3 months ended, holders exercised 4,422 warrants for cash proceeds of 141,000. That is awesome. That is awesome. 4,422 shares were purchased by DGens for 32 bucks a share. Hey, tip of the hat to you for helping out GameStop. That is so awesome. $141,000, right? Spent in just Q3, which was just a few weeks of Q3, right? They were issued on October 6th. So GameStop, the asset management company, is making some money. Okay. They have supporters of the stock. I'll tell you what. I mean, that's crazy. I wonder how much this number will be. I want to start tracking that number. you know, it's not actually that important of a number, but I bet in Q4 it's a decent chunk of change that GameStop's bringing in, selling its shares for a 50% premium to what their shares are going for in the market. It's amazing. And yeah, they sold a stapler for $250,000. Cash flows. Look at that. Look at that. Look at that. Cash provided by operating activities, $440 million improvement. That is called free cash flow positive. Free cash flow is booming. And I was a relatively early investor in Tesla back in the day. And man, these signals were flashing bright colors in 2019 when it's like, look, they are free cash. Like they're making cash. They're making a lot of cash. Their income wasn't there yet. They still weren't profitable as a company, but it was just depreciation expenses, right? Non-cash accounting expenses, but the cash was flowing and the snowball was building. That's really what you're seeing in GameStop is like, look, this cash is going crazy. I'll be right back. Let me go answer the door because I think a pizza just got here because I'm here to celebrate, y'all. Cheers. I'll be right back. Pizza time. Almost. Free cash flow. Crushing. Operating activities. Valuation of warrants. We've been through this. No material off-balance sheet arrangements. There are no material off-balance sheet arrangements. No material changes to market risks. And then here are their risk factors. I'll cover these in a video soon, breaking down some of these individually, actually value what happens. Other information. Oh, boom. Here's the computer share numbers. 85% are held in Seed & Co. 67 million held at computer share. And the vast majority of those 67 million are in book. Only 3.3 million in their plan. So that's pretty exciting. I actually do want to start tracking that and retroactively start putting that into my spreadsheet as far as what percent of the float is direct registered. because I think we're going to start seeing some momentum on that again, particularly as we start to see some momentum on the stock, which I do think is very soon. Dan Moore. Equity awards, great. And then it's just all that. Okay, so what's the Power Packs thing saying it's not there? Like, I don't, what, like, hey, Dawn, happy birthday, man. It's Dawn's birthday. I am curious. Oh yeah, I was there in Tesla. I made a lot of money on the Tesla run. That's for sure. Started loading up August 2019 and kept buying and buying throughout 2020 and 2019. And sold, I don't know, somewhere around January of 2021, right? I found the next opportunity that I wanted to leg into. Sold Tesla back then, Q1 of 2021. And I still like am generally a long-term believer, but you know, I don't own any Tesla right now. 10Q explicitly states that all transactions were not material. Okay, yeah, so that's what y'all are talking about. I don't think that means the Power Pack sales were not material. I mean, this is really the question, right? During the second quarter, the company launched the transactions with collectors and PSA were not material individually or in the aggregate during the fiscal year. So, like, this is the sentence that some people are saying digital Power Packs are not included in the numbers. And ultimately, if like, it's a moot point no matter what way you slice this. Like, you could say, oh, digital Power Packs is included in the numbers. It's like, well, we know the numbers, right? It's 256. Without digital Power Packs, I thought it was going to be 260. So if it's 256 and that includes digital Power Packs, it's like, well, digital Power Packs ain't really selling that much, right? If this sentence, sorry, let me just get to this one. If you think this sentence means transactions with, like, from GameStop to PSA were not material, like, if you think this is not talking about Power Packs sales, but you think it's talking about some exchange of money between PSA and GameStop, if that's what you think, then that means you would think that the revenue and profits from Power Packs are in these numbers. And if they're in these numbers, then you already know they're not really that material because the numbers are what we thought they would be, right? Now, if you think that this is saying that this is talking about digital Power Packs sales, right? We're talking about the actual sales of digital Power Packs are actually not material. If that's what you think, and they're saying because they were not material, we did not report them, right? Well, if they're not reported because they're not material, that's not some like hyper bullish, like, oh, just wait till they drop in the digital Power Pack sales in Q4. It's like, no, it genuinely is not a big number. Like, either this number is the number and therefore digital Power Packs was not a big number, or that number is not the number because digital power packs is being like not reported yet. And if that's the case, then that means it was not a material number. GameStop's not allowed to not report a material number. So whatever they did, it's like relatively low. I wonder what the threshold is for materiality in a 10Q. What's the threshold for materiality on a company 10Q filing? What can we learn? Zero to 2%, 5% of income is potentially material. Over 10% is always material. Less than 2% is definitely not material. Or less than 1%, I guess, is definitely not. So obviously, if this was someone stealing money, like ChatGPT is like, look, 100K item could be material if it's illegal, right? That's not what we're talking about. We're saying if GameStop intentionally is holding the numbers for power packs off of the books for Q3, and if that would be the more bullish interpretation of this, either way, it's not hyper bullish. And several people have commented in the chat like, hey, it was in beta. So yeah, like regardless of what power packs did during Q3, it's not somehow like intrinsically super limiting for the future of power packs. But like it's possible that they actually did report some level of income that's probably less than 5% of revenue and probably less than 1% of income. And it's possible they decided not to report that in order to allow Q4 to be the reveal and kind of the mic drop moment. You know, not the mic drop, because of course you'd want it to keep growing from there. But, you know, what is 5% of 821? You know, $41 million. You got to think if they did 41 million in revenue, they'd probably report it. The only thing is, if they did 41 million, but they were only getting 10% margins on their digital power packs, then that would be a $4 million improvement to their operating income. And that's just too high, right? That would be a 10% swing to operating income. Like, really, you're thinking like they could have made as high as $2 million, but probably less, probably 1 million or less than 1 million in operating income from digital power packs in their Q3, which is obviously not substantial. This is actually kind of encouraging. Like, we're learning a lot through this, because that 256 really is probably excluding power packs, which would make sense as to why gross margins were able to improve so highly when I expect digital power packs to be much lower margin than 33%. So for GameStop to be able to recover that high off the backs of Switch 2 declining, and for this growth in collectibles to still be relatively high margin and not coming down from digital power packs, makes sense that they went ahead and just left digital power packs off of Q3 entirely, which, as someone that's pumped to learn about this, to see the margins on it, super annoying. GameStop is like, we're not going to tell you yet. Golly. Oh, Ryan Cohen. Gosh. I bet shorts are so pissed. It's like you won't even tell us what you were supposed to tell us. Give us the bear case so that we can extrapolate it. And GameStop's like, we're not going to tell you yet. We'll tell you probably. We'll probably tell you next quarter, probably, but we'll decide when. Like holy smokes, dude. They just didn't even say anything about it. Y'all gangsters. Which is encouraging because whatever these numbers are all marginally slightly higher than this. It's just another reason why when you're looking at their Q3 numbers and you're looking at their trailing 12-month, it's like, look, there's just so many one-time things that make that number look as low as it is. And so the real forward-looking 12-month is much higher, right? It's pretty exciting. Obviously, you would rather the numbers be absolutely explosive off the jump. But is there some level of GameStop kind of intentionally sandbagging or suppressing Q3 to make Q4 that much more of a blowout? I'd say based on this language, like it's possible, but it is still in beta. One thing I haven't talked about is this random GameStop award show thing. Y'all saw this? I'm sure you did. Just making sure they haven't posted anything new. Big winners, big surprises. The inaugural GameStop Awards premieres on X and in stores tomorrow at 6:30. I mean, it's probably nothing. Like, it's probably just marketing. But, like, what is the GameStop Awards? you know, Particularly when historically the after hours, the day after earnings, is when they announce some type of equity raise or convertible or warrant. So, like, the fact that they're scheduling some type of company event, right, a few hours after where they normally would be releasing some type of news filing. It's like, does that mean they're about to drop an exciting news filing, especially with the stock reacting negatively? Like, is this a kind of a bear trap, right? Pull the rug out from under the shorts. It's possible. I don't really think that, because I think they'd rather set bait on more impressive numbers, right? Ultimately, again, the transformation is well underway. The big picture bullishness and excitement is still there, but like these numbers just don't pop off the page, particularly compared to Q2. It's like, man, your Q3 is actually a little lower than your Q2. Like, dang, it's kind of a bummer. GameStop can't control that. It's like, look, it's not our fault that the Switch 2 has been the most hyped thing ever, and freaking everyone went and bought one right away. Like, it's not our fault. Like, we got some lumpy sales, that it just came out. What are we going to do? But you got to figure that, I don't know. Ultimately, the shorts could collapse any day and the stock could go to the moon. But when you're talking about fundamentals, it's looking like, hey, huge building block. The floor just rose from something like 15 to something more like 20, 21. And the problem is, the disappointment is that the ceiling, I think the glass ceiling is still in existence due to GameStop kind of withholding its information about digital power packs. The trailing 12-month, again, still being in some ways like a fraction of what it's about to be, right? Huge improvement, 70% improvement year over year in TTM. But it's about to have another huge improvement. And again, I'll redo all these models, all that. Plenty of, I'm out here. I'm out here making videos. Okay. So, I'm gonna be making some more. but um, it's going to take some time to dive into every single aspect of these numbers. Overall, always lame to have lameness on the stock, but plenty of like the bull case and the transformation is still bona fide underway. It's me, BK says, our thoughts? I think you mean any thoughts on buying Leaps tomorrow? This is not financial advice. It's me, BK. It's not. It's not financial advice. But personally, you talk to someone that has lost so much money on call options in my life with GameStop. And so I'm not going to YOLO into Leaps tomorrow. But do I think the likelihood that GameStop is around 40 a year from now, like, does that, to me, is that more likely or less likely based on what was just reported in Q3? I'd say it's just as likely. Like it's just as likely, maybe just in some ways you could say more likely if shorts decide to pile on shorts post this earnings. Like it just feels like for GameStop to be above the convertible price, conversion price, the warrant strike price, and then above S&P 500 tranche, like the valuation requirement, those all happening right next to each other, I think is unavoidable just on the legacy business. Like even if they never reported digital power pack, even if digital power packs was a flop, like they are genuinely, as a store, like GameStop, the place where you go to buy things, they legitimately sell a lot more per store than they used to, at a lot lower cost than they used to, for a lot higher profit than they used to. No matter what way you slice it, right? And collectibles is genuinely still growing quite nicely. Where is it? 32% growth in collectibles year over year. Like, that's nice. The S&P 500, like the average earnings growth is 10%. So GameStop this is roaring growth for their most important division, and likely does not even include Power Pack's numbers. Right? So at a valuation like 22, could you make some money on Leaps? Yeah, but obviously you have to pay, like you pay a premium for the upside. And so you only make money when it's above the premium that you paid, obviously. And anyways, for me, I own shares and I own warrants, and I have many times YOLO'd into calls feeling like surely this is it. And as a result of my poor decision making with timing that, I mean, really great decision making. Every time I've made a ton of money, but then I just double down, right? And I don't like taking profits on calls. I like doubling down on calls, like a true idiot that doesn't understand derivatives. What I understand is the fundamentals. And if I really wanted to swing trade, I would just swing trade the stock. I still wouldn't even really go into recommending people dive into calls. It's just so much more complex of an instrument, and it's a market that GameStop doesn't get to make. Not that they really get to make the market for their own stock either, but if you're a direct registered shareholder, you kind of do. So, anyways. Boom Bam says, can you calculate how much Power Packs has done from the odds? Right? 8 lunar packs were pulled. And so you could use the odds of a pull to estimate how much money they've made. Yeah, you definitely could. And I will. I'm not going to do that today, but definitely could. Any other thoughts? I'm going to wrap this up in probably 5-10 minutes, but man, I've been talking so much. I haven't even gotten to eat my popcorn. Man. Oh, Punk, what kind of pizza did I get? Listen, there's a Domino's around the block, and they do that little two topping medium. If you get two of them for free. So my boys like the extra sauce, extra cheese on the Dom, and sometimes I get double pepperoni as my two toppings. Today I went Canadian bacon and black olives for my two toppings on my medium Domino's pizza with the extra sauce. Gotta go the extra sauce, especially if you're planning on having any leftover pizza. Leftover pizza with the single sauce, it gets all dry and hard. Leftover pizza with the double sauce, you warm that up in the oven, it's golden. It's golden. I did not get the stuffed crust this time, but I do like their stuffed crust. Sometimes when I'm feeling extra fancy, I go for that stuffed crust. Punky's an extra cheese gal herself. Yeah, my boys are all about the extra cheese. Every now and then I do it. Every now and then. But if I get extra cheese, I'm usually like add a second cheese type of guy. Give me a little bit of provolone on top of there or some Asiago. Well, guys, I can't wait to see what Arnold says I'm very fancy. Eating my homemade popcorn, watching the ticker do nothing in after hours. Anyways, I'm excited about this GameStop Awards thing. I will not be streaming this. If it's even streamable, I don't even know what it means. But it probably doesn't relate too much to the stock. But if it related at all, it would be bullish, right? Like it wouldn't be a bad thing. I don't think it's necessarily a signal, right? It says premieres on X and in store. I'm like, what is this? And the fact that they posted this on the day that they were posting earnings, and that earnings were, like, by and large, you could call them disappointing. Still very encouraging for the fundamental value and trajectory of the company, but disappointing in terms of what we thought. Q3 had a 30, maybe 35% chance of meaning for them to say, hey, before we release those numbers that turn that 35% into a 5 or 10%, there's still a solid chance. Like, it's not high, it's lower than it was. That the chances that Q3 specifically catalyze GameStop into that 28 plus type of range, it's like a 10% at this point, based on the way that, not just the way the stocks reacted immediately, but based on the numbers, like the switch to sales, and based on the lack of power packs clarity. Thanks, Simple Rick. I appreciate it. So for GameStop to post this before posting these numbers, to me feels like kind of like a wink from the company, like, hey, don't worry, like, we're going to do something. Again, like this, I would say the odds are 5% that Q3 numbers are the catalyst that puts GameStop into the 28 plus range. Because they posted this on X, I'm like, maybe it is 10%, right? Maybe there's something that's going to be announced after hours tomorrow. Or maybe this event is something somehow meaningful for the company that, combined with, hey, the immediate dump of the stock, which then you see it kind of fighting off of this floor. Like, sometimes, like, usually when you see a sharp decline in price, often it's followed by a sharp increase in price, right? So you put all those pieces together and it's like, this could definitely still rip. It definitely could. And of course, then you add in all the, like, hey, there's short sellers out there and pressure in time. And hey, DFV hasn't done anything, and he's going to do something again eventually, right? And hey, the buyback window or insider buying window and all the stuff. I don't think GameStop's going to stay at 22 this whole until 4 months from now. I think Q4 is the easiest quarter to start getting priced in before the earnings come out because it's happening during holidays. So there's a lot of signs on Christmas spending. There's a lot of signs on Switch 2 sales. There's a lot of momentum that's easier to build during Q4 that could start to get priced into the stock even before we see the Q4 numbers. And the other X factor is, of course, the overall market, right? If the overall market crashes, right, if the new Fed is getting introduced at some point soon, like there's just some speculation that the market crash could finally come. If that happens and somehow that affects the collateral that shorts use to suppress the stock, could that again be a catalyst, right? There's plenty of catalysts that could still happen before Q4 earnings come out. But I'd say you add all that together, I'd still say, I don't know, maybe more like 10%. I mean, for it to happen sometime during the next 4 months, I mean, maybe 15%, but I think more likely the Q4 numbers are needed to lift the floor meaningfully to where it actually feels like the floor is being lifted. The fundamental floor has been being lifted for months and months and months. It just doesn't feel like it yet because we were still trading a healthy bit above our fundamental floor back then. We were still trading based on the speculation of future value created. And now we're trading closer and closer to the actual fundamental floor. So again, as that fundamental floor grows, I think you're going to see the market value continue to grow with it and eventually catalyze into a momentous stock again. Anyways, those are some more thoughts. How long can I talk about this company, right? I'm going to let y'all digest this. We've been here for 3 hours. Trader says, I want to accumulate more shares. Price staying low is fine with me. Yeah, the price is low. Accumulation window is extended. Hip hop says, I like the thoughts. Oh, you also said something hip hop of like, something like, I can hear the disappointment. We're all going to be okay or something. I appreciate that. Yeah, I'm not going to have trouble like falling asleep tonight. I'm not going to be like, man, what should I do? It's just kind of like, but also like, what's going to happen tomorrow? Right. And then also like, oh man, I got a lot more spreadsheets I can make now, a lot more numbers I can crunch, a lot more equations I want to solve. Yeah. Free cash flow is great. Clark says, thanks and enjoy the pizza. Thank you so much. I am going to try to get to that before it's cold. It's still warm. Tristan says, thanks for the stream. Thanks, Arnold. Thanks, Punky. All this fundamental talk has to consider the implications of that powder keg finally exploding. The day will come, right? One day tomorrow will be today, and it's going to be super rewarding for those of us that have been in for the longest, that have suffered the most for it, right? But it's also going to be stinking rewarding for the people that came in just in time. I mean, that was me with Tesla. August 2019, I'm like, wait a minute. There's a couple of months left before this is going up, like dramatically, like a fundamental repricing, right? GameStop's in a very similar place right now. Like a very few amount of days or months left before the fundamental repricing of GameStop starts to happen. And man, it's an exciting time. I wish that I was like I was with Tesla, like just now on this stream, someone just now sent this to me. Oh, what's the new sub milestone? I'll save that for a video soon. But hey, thanks for all the subscribers. Whoa, 20 of you guys subbed during this stream. Thank you guys so much. I appreciate it. some people earlier, before earnings came out, some people contributed to a mic. So I'm, 100% of the earnings of the channel go to DRS Book Jamie shares, but some people put in a special request specifically to be used for a mic to help improve my audio quality. So I appreciate that a lot. So those will be the slight exceptions. Those specific requested dollars will not go to DRS Book Jamie shares, and it will pain me, but everyone will be better off for it as my audio improves. So thank you to those that did that. Ward Logan says, glad you're here. Totally honest, no games. Thank you so much. Thanks to everyone. Hey, cheers, everyone. Enjoy your evening. I will be tuning in. Just, I'll be on dad duty. I'll be with my boys, but I'll have a refreshed page or an earbud in, whatever, tomorrow during this GameStop Awards. I will be excited to be refreshing their news release page tomorrow after hours in anticipation for, is there another warrant issuance, or what might they do? And obviously I'll be watching the stock tomorrow, digest this earnings report during market hours. I'm not planning on live streaming all of that. I'm just saying this is some stuff I'm going to be doing. I'll try to make a video at some point tomorrow, but it's just, I get all excited because there's so much content to make, and it's like, what should I make first? There's too many things. But appreciate y'all for the love. Thanks for the likes. Thanks for the comments, all the engagement. This is all I have for you today, and I will see you in the next one. Thanks for being here.